Ladies and gentlemen, as I explained in the last video, we are starting the process of a short squeeze for Tesla stock. We have not experienced a short squeeze thus far. This is now the second day that we've actually seen short sellers starting to cover on short positions. The first day was like Tuesday of last week, so there's very little correlation. This is essentially the start of what could be a larger short squeeze. As you know, Tesla did very well today. And as you may not know, which you are about to learn, there was over 2 million shares that were covered today. There is 77.3 million shares still sold short. So call it 75 million shares after today's 2 million that were covered on. Now, short sellers today lost over $2 billion. And heading into tomorrow, you need to pay very close attention to this video because tomorrow and Wednesday could really make or break, if you will, the year-end rally for Tesla. And I think the odds are really high that we're going to get that year-end push to probably over $500 per share. I would not be shocked if Tesla is $100 higher than where the stock is currently by January 1st. That's why this video is so critical. And specifically why this video is so important before tomorrow morning. Because tomorrow morning we get retail sales. Now, some people are going to say, why does retail sales even matter for Tesla? Why does it matter for the markets? Well, clearly it matters because, well, if retail sales are good, that means the economy is good. If retail sales are bad, that means the economy is probably not doing so great. Now, there's a lot of indications that we're going to have some good retail sales numbers. I mean, even Maersk, the shipping giant company, well, their North American CEO just said that they expect a strong demand and another year of disruption for global trade in 2025. So we're seeing strong demand. Like, the odds are good that retail sales are going to be good tomorrow. But what I say on this channel all the time is valuations do not matter until something changes. Now, for Tesla, the opportunity is so large. The total addressable market is so large. The valuation is high, much higher than other names, because Tesla is expected to grow a lot more than other stocks. I mean, look at the heat map of the S&P 500 and forward PE multiples. Tesla's trading at 136 times next year's expected earnings. But that doesn't matter. I'm a little bit more concerned about, if you want to be honest, with Apple and Microsoft and Nvidia and Amazon that are expected to slow down next year. Their growth rates are expected to slow versus Tesla that is expected to ramp up their growth. Okay, so again, valuations do not matter until something changes. Between now and year end, we're in this weird little purgatory period where we all kind of know expectations are too high for next year. Wall Street, a lot of people, including myself, are coming to expect a correction in 2025. Now, as long as nothing changes, we're going to get a seasonally strong end of the year rally, a Santa Claus rally, and repositioning, new positioning into equities heading into 2025. Okay, think about it like this. People don't want to change their expectations for next year. Okay, the bias is higher. People are positioned for markets to go higher into year end. JP Morgan and Fundstrat, they believe 6,300 is on the table here in the last 11 days of trading of this year. Okay, so people do not want to all of a sudden become negative on our markets. I explained it like this in the last video. It's kind of like going to the dentist for your 6-month or 1-year checkup, however often you guys go. And being nervous, rightfully so, right? Because what if you have cavities? Well, you go to the dentist, you're nervous. After they do their exam, you find out you have no cavities, then you're not as nervous. Or even potentially once you get in the chair, you're not as nervous as you were, in the hours or the days leading up to going to the dentist. Okay, maybe that's just me. Maybe I've just had bad experiences at the dentist and I get nervous at the dentist. Okay, I think this applies pretty well to most people though. But once you're like in the chair, once you realize it's not as bad as you feared, then, well, you're not as nervous. And that's kind of the same situation for markets in certain catalysts. Okay, retail sales is a big catalyst. On Wednesday, the day after tomorrow, you have the Fed, which is another big catalyst. At this point, I'll say it as clearly as I can. If nothing changes, if we kind of meet expectations for retail sales and we meet expectations for the Fed, and PCE is not a disaster on Friday, personal spending is not a disaster on Friday, or even Wednesday's initial jobless claims are not another big rise, then you're going to fall into this seasonal pattern of bullishness. From December 15th through December 31st, that 2-week period is the most bullish 2-week period for the markets for any year and any time of the year. Okay, with an average return of anywhere from 1.5% to 2%, depending on what days you start and stop your kind of analysis on, and what years, okay, what time period you're looking at. But historically speaking, this is a very bullish time of the year for markets. And honestly, I think the bar is set pretty high for people to kind of change their narrative around markets before 2025. Okay, like what I mean here is we're going to have to see a really bad retail sales report tomorrow for people to become concerned about growth. Okay, we're going to have to see a really high initial jobless claims report on Thursday for people to all of a sudden get concerned about the economy and growth. We're going to have to see the Fed borderline say that they're prepared to raise rates for the markets to get more bearish at this point. We're only expecting 2 to 3 cuts next year. Expectations are pretty low across the board. We're not heading into tomorrow's retail sales report or the Fed on Wednesday with super bullish expectations. Okay, so the odds are very high, like 85, 90%, that we're going to at least meet expectations or at least not be disappointed in a large way. That is going to alleviate the risk catalyst and allow markets to move higher. The path of least resistance right now is higher, and valuations, while they are stupidly high for some names, again, Apple, Amazon, Microsoft, these names that are expected to slow down growth next year. I mean, Apple has not grown in years. It's grown revenue like 5% since 2021, but yet the stock's trading at a 30 times forward multiple. Like, that is egregiously expensive if you look at a, PEG ratio, price, earnings, and growth. But nothing's going to change unless the data changes. And it's all based around expectations. So what I'm saying here is expectations are not that high. The reality is we're probably going to meet expectations, and that will allow markets to move higher. Now, in the adverse scenario that we do not meet expectations, that retail sales is a disaster tomorrow, the Fed borderline says they're going to raise rates, that is when valuations start to matter. That would be a problem between now and year end, but I think it's a very low likelihood of actually happening. So assuming things come in line with expectations, which is, again, the easiest assumption to make at this point, it could easily send Tesla over $500 per share, potentially by the end of this week, because of how many catalysts we have and how much catalyst risk will be taken off of our markets. Essentially, after this week, we really don't have anything left. Like, I mean, Wednesday is going to be the big catalyst with Jerome Powell. Thursday could be an exceptionally bullish day for markets following Powell, as long as initial jobless claims are not super bad. And then Friday, you have PCE, you have personal spending, you have personal income. I think that's, kind of an afterthought compared to the Fed. But assuming we don't get a big disaster on Friday, it looks like Wednesday, Thursday, and Friday could be very much risk-on days for markets. And that's when you could see a lot of the rally for Tesla and the rest of the markets. Now, considering Tesla was up over 5% today, sitting at about $460 per share, yeah, it could get crazy for Tesla stock here. All you need is a 9% rally for Tesla to get to $500 per share. You could see a 15% plus rally throughout the rest of this week. That could send Tesla 15% higher, would be about $530 per share. That, at this point, does not seem too far-fetched to me. Now, what I explained in the trading community earlier today, if you guys want to join that, check out the link down below in the description of this video. I did make a small hedge today, just in case I am wrong. That is on Apple, the big tech name that I am by far the least bullish on. Okay, small trade, high risk reward. It's a max loss of $300, okay, for the whole trade. If it goes to zero, I'll lose $300. If I get a max gain, which would be Apple falling about 8.5% over the next 2 weeks, that would return about $25,000. I like those risk reward, odds, even if there's a low chance of the Fed being super negative or retail sales being really bad. Okay, I like $300 risk, $25,000 max reward for an 8% drawdown in Apple over the next 2 weeks with all of the catalysts that we have. So if you guys want to see that trade, you want to get notified every time I make a trade, check out that link down below in the description of this video. Anyways, what I explained to members in the trading community earlier today is Tesla's RSI is at 81.5. Okay, once you get to this point, you normally rally to the 88 to 94 level on the RSI. Okay, historically speaking. Okay, so from that perspective, you probably have another 6 to 10 points, 13 points higher on the RSI before Tesla's, sentiment is too extreme. Before you get that kind of sentiment correction. So from that standpoint, assuming all else equal, Tesla could easily rally into the 500s before the RSI signals like, hey, we need to take a little bit of a breather. I also want to point out the volume, okay? Volume today is a little bit over 100 million, okay? Once you get to like 200, 210, 220 million for volume, that's when rallies tend to historically peak out for Tesla. Okay. Once we get those kind of volume days, that's when I think the rally could be starting to top out for Tesla. We are not there yet. Okay. We've essentially been rallying on average volume for Tesla. That is a very good sign that when volume comes in, and we get above average volume, the stock's going to see above average gains. So I think what you want to be watching right now is the RSI and volume. The RSI suggests we could rise again another 6 to 10 plus points on the RSI, which would be quite a nice rally from here. It's hard to put that into a percentage basis, but that would send you well over $500 per share. Okay, historically speaking. So RSI looks really good. Yes, it's high, but Tesla's RSI tends to go a lot higher, right, during these kind of rallies. So that looks good. Tesla's volume looks good as well from the perspective of we're not at those peak volume levels yet. And we're likely going to continue to see volume pick up in Tesla. Okay. Now, from the short position side, it makes a lot of sense why shorts would want to cover on short positions on Tesla heading into the end of this year for tax loss harvesting reasons and for the simple fact of why would you want to be short on Tesla when Tesla is going to have such a great year next year? Tesla could emerge in 2025 as the only pure AI play on our markets. Yeah, the only company that is really going to benefit top and bottom line from AI. Now, a lot of companies are benefiting from AI. The bottom line, they're not really benefiting from the top line. The AI component of Google and Microsoft and Amazon is minimal at best, less than 1-2% of their business. Tesla next year and the next year after that, 2026, Tesla's business could be 25 to 50% AI. And that I don't think is fully reflected in Tesla stock today. That is not something you want to short, okay? We are clearly moving from focusing on the AI enablers, as I've called it, semiconductor providers, to AI appliers. Tesla is by far the winner if you're thinking about AI appliers, okay? And I made this example in one of the previous videos as well, but it's kind of like the internet. Who enabled the internet? Think about Comcast, right? Think about Spectrum. That's who I have my internet through. Did they win off the internet? Yes, but not nearly as much as Google or Amazon. Okay, the real winners to new technology are not the providers of that technology. They are the users of that technology. And Tesla is by far the biggest user and benefit to AI at this point. Even look at NVIDIA. NVIDIA is officially in a correction. Down 10% from its all-time high. Whereas Tesla is soaring. I think you're going to continue to see a lot of that in 2025. And I think Wall Street's starting to kind of open up their eyes to that. And I think that's why you had 2 million shares that were covered on today. The fact of the matter is, you could see 5 to 7 million shares start to get covered for a couple of days in a row. You could see the amount of shares sold short drop from, let's call it 75 million to 40 million. That's also when I would say, okay, maybe the short squeeze has taken its course. But you're not there yet. You've just gotten started. And honestly, with a short squeeze, if it progresses into a full-blown short squeeze, which could very well happen into the end of this year, even into the first, week of January with the quote-unquote January effect, you could easily see Tesla a $600 stock. Again, with a short squeeze. Do I think it'll stay up there? Probably not. It will come down in the correction in Q1. But it's really hard to make a bear case on Tesla between now and January 1st. It's almost impossible. Like what? Valuations? Like Wall Street's going to wake up one day and care about Tesla's valuation or Apple's valuation? No. They only care if something changes. Assuming the data does not change markets' expectations for 2025 and for growth and for the Fed expectations, I just don't see the bear thesis over the next 2 weeks. And the next 2 weeks could drive Tesla stock much higher. Now, option activity, there's a lot of activity around that 450 call for next week, or for this week, this Friday. You have 96,000 for volume at the $500 call. That is going for $300 per contract, mind you. So that is the current strike that has the most activity. Right behind it is the 460 call that's currently $1,300, and you have about 71,000 for volume at that specific strike. So, I mean, what we've seen recently is these strikes with a lot of activity tend to be hit, in the given week. So from that perspective, options markets are betting that Tesla could be $500 per share or higher. Technically, it would be $503 to break even on these options by the end of this week. And I would not bet against that. Now, is that a certainty that happens? Absolutely not. Nothing's a certainty. But is it super far-fetched that Tesla could be over $500 by the end of this week? Not at all. Not at all. Again, it's like an 8.5% move from here to get to $500 per share. Like one more good day and you could be over $500. So just my thoughts. I hope Tesla comes down before, the short squeeze starts. I don't think it's going to happen. I'm not super optimistic on that. But hey, that's why we've been building out our positions for years here on this channel. So let me know what you guys think about this information down below in the comment section. Hopefully this provided you a little bit of context to go off of. Again, I'm not a financial advisor. I'm not a financial planner. Yes, we've been really correct about Tesla this year. Doesn't mean I will be correct into year end. Again, something could change. Retail sales could come in negative 5% tomorrow. In that scenario, yeah, that would change a lot for Tesla and markets. A ton. So anything's possible. But on a probability standpoint, I think there's probably an 85-90% chance Tesla goes much higher into year end. And knocking out these catalysts this week is just going to eliminate some risk from our markets. And when you eliminate risk, you get upside. But again, just my thought, just what I see as most likely. Hit the like button, subscribe to the channel if you made it to the end of this video. If you like my perspective, you like Tesla stock, or just want to stay up to date with what's going on in markets, and of course with Tesla. Again, join the trading community if you guys want to support the channel. Thank you very much, and thank you guys for those of you that send the super thanks on these videos. It's the craziest thing when I get a notification on my phone. $5 or $10 or even $2 or $50 or $100 just to say thank you. And literally, like, you guys say thanks. Like, that's pretty much it. It's incredible. So thank you guys so much. Never ask for that, but it is remarkable when it happens. Yeah, that's it. You guys have a great rest of your night. Sure, you can sleep well tonight, and I will see you in the next one.